Gautam Shah is with us, founder Goldilocks Global Research. He's joining us to take some questions on markets. Gautam, great to have you here. Thanks for joining us. It just seems the market's done quite a bit, coming back sharply, and everyone is now, of course, a little confused about is there more upside here broadly, or do we go into a bit of a tailspin of consolidation? Overall, the mood is not helping. I mean, you look at what's happened, worries around the Japanese bond market, US bond market. So there are these small, localized tremors, earthquakes, whatever you want to call it, keeps popping up once, every now and then, keeping everyone on their toes. So it's not all clear in that sense. And of course, there is this big thing of tariffs. What's your sense, Gautam? Do you see a clean run, or do you see a much more fractured kind of path from here?
Good morning, Prashant. Mood not helping is actually good news because it keeps the bull market in check. I think we've handled a lot of local and global stress in the last few months, and the markets have come out with flying colors. The fact that you are at such elevated levels of 25,000 itself, I think, is a big win. I don't think many people in the market would have thought that we can come to such levels so quickly. And I do see bull market characteristics. I mean, if you look at the momentum, the participation, the way India has handled the news flow, local and global, I do believe that we are headed significantly higher. And, these issues that keep propping up from time to time, I think it's quite normal because I think we live in a world where something has to happen on a daily basis. But the price action has been super solid. There are no concerns on the charts. The market is not even significantly overbought. In fact, in the last 1 week, we've just gone a little sideways after such a big rally. And you have immediate support at 24,500 and possibly 23,800, which is more of an investor support. So keeping all of these factors in mind, I do believe that this dip is a buying opportunity. And I do see the Nifty moving towards a level of 25,600 and eventually lifetime highs. And I do see a wave of outperformance for the mid caps and small caps. So I think one should be invested. Even the US market setup is quite solid, and we see those markets hitting lifetime highs as well. So I don't see, as a technician, I don't see any concerns on the charts, and I think the markets are in fine form.
Okay, so 2,500 is the immediate stop, then all-time high levels, mid and small caps outperform. You spoke about US markets, Gautam, and I see Goldilocks has done a lot of research on the US markets. Your first big picture report for the US pack is out. So tell us a little bit more about the US markets, because overnight they went into a tizzy following the surge in bond yields. So that is emanating as a bit of a concern. So considering there are linkages between what happens in the US and back home in India, what's the call on the US markets, top down?
Yes, Seema, so we closely track all the US market indices, the ETFs and the top stocks. And I think since we have a product there, I think we now have a better understanding of what's happening in the US. And, after the Trump talk and the fall that we saw, again, not many people globally would have thought that US markets will come back so strongly, and they have. So I think the men have been separated from the boys, not just India, but world over, including the US. And I do see the S&P 500 moving towards a level of 6150. In fact, even the Russell 2000, which tracks the mid caps and the small caps, is coming back really well. So I think globally, I don't see a problem. I mean, even if you look at Europe, markets like London, Germany, France, all very strong. Asia has been relatively strong. Look at Taiwan, look at Singapore. So I think globally we remain in a bull market. That's what I want to call. I know it's very early to call for a lot of people, but the characteristics globally suggest that we are in a bull market, and this is only going to help India, which anyway has a lot of standalone positives.
Okay, all right. Ooh, the Nifty actually, as we speak, it's actually drifting lower. We're at around that 24,600 mark, which incidentally is one of the important support zones. So this 24,500, 24,600 is the important zone. Hi, Gautam. Good to hear your comments. You're sounding quite bullish on global equities and India included. What about the Nifty Bank? That's been the leader, right? I mean, it saw a lot of selling, the FI selling, it underperformed for a period. And then when it found its form, well, it took the Nifty higher. What's your take?
Yeah, I think in the difficult period of October to March 25, the Bank Nifty actually did not go down as much as the overall market. I think that was the key takeaway, that the banks have inherent strength. And thereafter, Bank Nifty single-handedly, took the Nifty higher from levels of 50,000 to about 56,500. It's consolidated beautifully in the last 10 to 15 days. It just passed on the baton to some of the other sectors. And you might have noticed how technology, metals, capital goods, real estates, FMCG started to do well. But I think this breather phase for Bank Nifty is likely to end. And once the level of 56,000 is cleared, I think Bank Nifty is headed towards a level of 60,000. And when I see all the top stocks, I remain quite encouraged that they will do well. But one thing is very clear, that the movement or the outperformance is now shifted to some other sectors. And I continue to believe that metals will be one of the star performers of the next 6 to 12 months.
Metals will be one of the, I think it's a view that you've had in the last time we spoke as well. And out of the pack, you'd recommend buying a bunch here on the metal side or anything in particular, Gautam?
See, a couple of days back, the metals index hit the first resistance of 93.50. And I think once that number is taken out, you are heading towards a level of 10,500. That's about 12% upside from where we are. And typically, the iron and steel producers are the ones that we like the most. But I think everything will be a beneficiary. We've seen in the last 4 years that when a theme works, everything does well. And that's what is likely to happen with metals. So the top 6 or 7 names across the board, ferrous and non-ferrous metals, I think will be an outperformer. See, the Nifty is not going to give you supernormal returns from here. You have to be in the right themes. And I think real estate, PSU, and metals are 3 pockets which I think will see serious outperformance.
3 pockets. You said real estate, metals, and the other one is?
PSU. I think PSU, after a mega run for about 2.5 years, went through a consolidation for about 8 to 9 months. And I see the entire basket coming out beautifully in the last few weeks. And I think there is clearly a lot more money to be made there because valuations are comfortable. These are companies that don't have anything to do with foreign soil. And I think the structure is beautiful after that, initial run up. So I think PSU, given all of these factors, stands out for me for the next 6 to 12 months.
So PSUs in banks, are you talking about defense? Are you talking about power, oil and gas, and any stocks or any trades?
See, I think it's going to be across the board, even though we love the top 3 PSU banking names. So I think that's one focus area, the PSU power names, the PSU infrastructure names, and the PSU oil and gas names. These are the pockets that we like. Defense and railway, I know they've done very well in the last 15 days, but I don't think the risk reward is justified to go long here. But apart from these 2 pockets, the entire basket of PSUs, including the PSU metal names, I think will stand out.
Okay, all right. What about Reliance Industries, Gautam? That's like an index by itself. And that went through a big period of underperformance and bounced off the 1100 odd mark. And it's done quite well from there. Any view on this one?
Yeah, I think it's good to see that the underperformance has at least ended. It tested a level of about 1110. From there, we've seen a 300 rupee rally. Structure is looking a lot more comfortable. But will Reliance see major outperformance here? The answer is no. At the same time, it's not going to fall much. So I do see a gradual move up on Reliance. And, if you have 3 big pockets of the market, which is banks, IT, and Reliance, all having good setups on the charts, you can't have the markets go down too much. And that's the reason I feel at today's level of 24,600, the market remains a buy risk reward.
By the way, sorry.
I was mentioning that IndusInd is
moved in the green.
The green. And this is what I was saying in the morning. I mean, if you look at the last 1 month, there's been so much bad news where the stock is not selling off. Everything has been, and there's been a lot of supply. All of it has been absorbed without breaking the price. So, people still hopeful that, it's just a valuation game that you're buying something which is now beaten down, depressed, and maybe there is some money to be made from here. So we'll see. You, of course, heard, Digant, who thinks it's largely going to be a trading game. 600 to 800 was his range broadly, but doesn't really, do very much point to point a year down the line. Of course, Hetal was also with us in the morning on IndusInd. 210 lower on the Nifty is what you have. On real estate, Gautam, what are your picks?
Again, I'm sticking to the top names. I think real estate is a structural trend for the next 3 to 5 years. That's the way I want to look at it. Went through a nice 1 year of consolidation. If you look at DLF, Godrej Properties, Oberoi Realty, Brigade, Prestige, Shobha, all went through a large consolidation in the last 1 year. And they all seem to be creating a foundation for the next leg up. You can't play India and not play real estate. I think it's a direct proxy to the India story, which banks were for a long period of time. So I think given the valuations, given what I'm hearing on the ground, what I'm hearing from many of my clients, I think real estate from a risk reward perspective stands out, and the index could actually see a 20% appreciation from these levels.
Gautam, great conversation. Thank you very much for joining in.